Dirty dealings, corporate battles, consumer woes. This is Evening 5. Public Bank, via its subsidiary Public Bank Vietnam, is buying RHB Securities Vietnam Company for 374 billion dong, that's 72.55 million ringgit cash. The proposed disposal will see RHB Investment Bank exiting Vietnam's stockbroking and securities market. Public Bank MD Tan Sri Dr. Teh Alex said in a statement that the proposed move presents a good opportunity for the lender to expand its financial services offerings in Vietnam to include securities trading and to participate in the immense growth potential of its capital market. The group also expects the acquisition to provide synergy to its Indochina operations, given that it has an existing securities trading arm in Cambodia. In a separate statement, RHB Banking Group MD Group Chief Executive Officer Muhammad Rashid Mohammed said the divestment is a strategic decision which aligns with its long-term business direction of focusing its resources and efforts in markets where it is more established and has a stronger presence. RHB Bank expects a net gain of 29.15 million ringgit from the disposal of RHB Securities Vietnam, which has recorded deteriorating financial performance since FY 2019. The transaction is expected to be completed by the end of the second quarter of this year. Public Bank's shares closed 0.45% higher at 4.43 ringgit, while RHB Bank's shares rose 0.18% higher to 5.63 ringgit. The ongoing slide in the ringgit puts it a whisker away from a record low, a Bloomberg report notes, and continued weakness in Malaysia's exports as well as US dollar strength may just push the currency past that level. At last look, the ringgit was hovering at 4.7845, about 2% away from reaching 4.885 per dollar, a level last seen in 1998. The local currency has dropped nearly 4% this year. Citing Kun Goh, ANZ's head of Asian research, the report said there is a risk the ringgit will reach a new all-time low. The ringgit hit 4.7958 in October, the weakest since 1998. The report said that a decline beyond this level may bring the 4.82 to 4.85 ringgit per dollar range into focus. Most analysts are forecasting a stronger ringgit by year-end though, with OCBC seeing the currency recovering to 4.6 per dollar and ANZ predicting a level of 4.45. Bank Negara is also expected to keep the OPR unchanged through 2024, even as the Fed eases its monetary policy. OCBC currency strategist Christopher Wong was quoted as saying that this would eventually narrow the yield differentials, which means there's room for the ringgit to recover some lost ground. The MOF said practitioners of traditional and complementary medicine, or TCM, will be exempted from the 8% service tax. Finance Minister to Datuk Sri Amir Hamzah Azizan told Bernama that this exemption would apply to those who are registered under the TCM Act 2016 Act 775. The service tax will come into effect on March 1st, 2024. He said that in line with this decision, TCM practitioners who have registered with the Act do not need to register with the Royal Malaysian Customs Department. This includes those who are involved in Malay, Chinese and Indian traditional medicine, homeopathy, chiropractic, osteopathy and Islamic medical practices. It also applies to services provided by medical or wellness centres, massage parlours or other such places managed by registered TCM practitioners. Commenting on the move, Amir Hamzah said it is one of the efforts to increase the people's well-being, as stressed in the Malaysia Madani concept and incorporated in the Madani economy framework. Hup Seng Industries said its FY 2023 earnings surged by nearly 73% to a 7-year high as sales rose and costs fell while proposing special dividends. FY 2023 net profit totaled 45.09 million ringgit, while top line rose 12.3% to 357.27 million ringgit on higher volume. The biscuit maker expects this year to be very challenging though, with the operating environment remaining highly competitive, and said it will evolve to meet the demands of consumers and strive to continue to maintain and improve product quality. The group will also focus on maintaining its market share and product competitiveness, as well as leverage operational efficiencies and cost-saving initiatives. It recommended a special dividend of 0.5 cent per share, on top of a third interim dividend of 1.5 cent per share. For the fourth quarter of FY 2023, Hup Seng's net profit climbed 10% to 13.68 million ringgit, while revenue was up a marginal 0.23% year-on-year to 95.15 million ringgit. Shares in Hup Seng ended 0.62% higher at 81 cent, valuing the company at 644 million ringgit. Appointed independent advisor Main Street Advisors deems the takeover offer of 85 cent per share for Rexit by its substantial shareholders as not fair and not reasonable. Main Street concluded in a circular posted to Bursa that shareholders should reject the offer by Datuk Xiao Gim Shen, Medical Assets Holdings and Burmas Holdings. According to Main Street, the offer price of 85 cent represents a discount of between 2.8 cent and 8.4 cent, or about 3.19% to 8.99% to the estimated value per share, ranging from 87.8 cent to 93.4 cent based on discounted cash flow. It is also at a discount ranging from 1.85 cent to 7 cent, equivalent to 2.13% to 7.61% to the last transacted market price of Rexit shares as of the last trading day. Additionally, the joint offerers are seeking to maintain Rexit's listing status, which means shareholders will still be able to trade Rexit shares even after the closing date and will have the opportunity to realise their investment in Rexit shares in the open market. At the close, Rexit shares were 1.1% higher at 89 cent, giving it a market capitalisation of 168.5 million ringgit.